All right, traders. Today, we are talking about flip zones. You know the draw. So let's go to the chart. Let me show you guys how to catch smart entries using what? Flip zone. You know what a flip zone is? Let's go find out. Traders, flip zones. What does it mean? So from what we have here, flip zones are a price level where supply or demand zones are broken and overtaken by opposing strengths after initially reacting with price. The break signals a shift in market structure, so pay attention so that you understand the difference between flips and breaker blocks. Now, from your illustration, you can see that this is a bullish example. Now, the price was pushing to the upside. The normal order block strategy is that the price will react to these order blocks, smash TP here, the point of reversal, and waiting for a new break of structure and continue. But now look at what the price did. Price tapped into the order block, which is the initial reaction I talked about here. There must be a reaction before the break. There must be what? A reaction before the break. This is like the most important stuff about flip zones. There must be a reaction before the break. So price tapped into the order block, reacted, more like giving the other block traders hope that, pricing would push up from there, and immediately we got a break of that particular order block. So the flip zone will now be the point of reversal. That is where the break happened from. That is now what you will map out as the flip zone, and wait for price to tap into that zone and then push to your direction. Same thing is applicable here. A break of structure to the downside. We map out the order block. What did the price do? Price tap into that particular order block. Now a little hope that it's going to move in our direction. But what happened? Price clear it to the upside. The flip zone would be from the point of the clearance. That is the point of reversal. You can see the price tap in there and then move in your direction.
So let's get to understand why this is important in smart money concept trading. Importance of flip zones. A flip zone shows that price has officially shifted direction. That is, from bullish to bearish. It helps you avoid trading against the trend. So you can see what we have here. Remember the initial explanation. The price must react before the break, and then the point of reversal which caused the break of the order block, making the other block invalid, would now be what? The flip zone. And that is where you position for your entry. The same thing is applicable here. So let me show you guys some of the confluences you need to see that would make a flip zone valid. I've already stated one. There must be what? A reaction. Let's wait till you see them. Okay, traders, to get a valid flip zone, number one, we must have what? A broken order block. Price will give an initial reaction which will be overpowered by the opposite direction. So you can see from this example, we got a break of structure, fine. We mapped out the order block that caused the break of structure. Now you can see price tapped in, print out decent move from there. But then after that, we got a break to the downside. I'm going to show you how you can also map out the flip zone. So you don't just go to map out anything you see you want, when order block breaks. Now, what I want you to note here is what? The initial reaction. Price must react from that order block to show that it is ready to move to our direction. But then it will just clears us out. That confirms what? A flip zone. And what I want you to note is the structural break. After the reaction, there must be a clear break of structure or change of character, either to the upside or to the downside.
From this illustration we have here, this is to the downside, showing what? A change of character. So a true flip zone only forms if there is a structure break. So it can be what? A break of structure, or what? A change of character. Please have that in mind. So the next here is retest and respect. So after the break, you wait for price to come back into the flip zone. So just like I've written here, after the break, price comes back to test the zone. This can serve as a point of interest. So the flip zone would now be a point of interest. So once the break happens, wait for price to come to retest the flip zone. I would also show you guys how to, specifically map out the points. That is the flip zone, just like how we do for that of order block. Have it in mind that when mapping out your flip zone, it still follows, our SMC rules. So the confluences with the SMC tools. Now, the flip zone and aligns with other smart money concept tools, such as order block. So when mapping out your order block, look out for the last candle before a strong move down, or the last candle before a strong push up. And you can also make sure that there is fair value gap nearby. And then work with discount and premium zone. That is for the flip zone. So once price clear the structure, you look out for the order block that cleared that structure. That is what you would map out as flip zone. Remember, after the reaction, there is a break. And when the break happens, look out for the last candlestick before that break. And you do what? You map it out as your flip zone. Now, as you are mapping it out, you also need another confirmation. Fair value gap must be there. So you map out your FVG and then wait for price to tap in. Remember, discount and premium zones. It is important for the entry placement for flip zone.
I'm trying to also show you guys this example. That is for bullish. The previous one was a bearish scenario.
Now, you can see here, price cleared a break of structure to the downside. This is the order block that caused the break of structure. Look at this. Price tapped here, initial reaction, and then after that, we got a break to the upside. So what would you map out? The order block that caused that break. Price tapping in and then to the upside. So have it in mind that when placing your entry, you can decide to go aggressive or you can work with confirmations. Now, for the stop loss. Stop loss can be above or below the flip zone with some breathing space and then take profit at the point of reversal. So if you were wondering, how you can go aggressive or with confirmation, I have a lot of videos here showing you how to take an aggressive entry or confirmation entry. So just make sure you're up to date. Do well to watch all the videos here and understand the trading approach and start making good money for yourself. All right, traders, thank you for watching. See you in the next one.